Assalamu alaikum. How are you, friends? So, leading to the last section of FM, which is section C, and this is one of the very important section. Okay, because here you need to write. Either you have to provide your response in Excel or you have to provide your response in Word. So here I'm going to show you. Right, I'm going to do both the questions from section C in the practice test 1. Okay, let's go. And this is the first question. So your section C question will come like this. On the left, you'll be given the case study. On the right, you'll be given either you'll be given the Word to type or you'll be given Excel to do your calculations. Compared to AFM, when you see your AFM, there you have a choice, you have an option. Okay, you decide in which you want to give your response. Okay, response option, you have that option, but in financial management we don't have that option. We are given an Excel, means we have to do our work in Excel. Okay, as I go through section C, please make a note that what are the areas asked mostly in section C. Okay, if you see, some areas are always asked a lot in section C, like investment appraisal, business valuation. So evaluate. Okay, first to start with the requirement, it's for 4 marks. Okay, evaluate whether the company should accept the early settlement discount offered by its supplier. Okay, as you read through, you will see there are a lot of numbers and it becomes hard for you to remember so many numbers, right? So you can keep a note of it somewhere in the scratch pad. You can use it for your understanding. Okay, in case you want to use some number, you want to remember it. Okay, so let us read the case. The company, Nesot company, has credit sales of 45 million per year and on average settles accounts with trade payables after 60 days. Okay, one of its suppliers has offered the company an early settlement discount of 0.5% for payment within 30 days. What is the early settlement discount? It is 0.5% for payment within 30 days. If you see, the trade payable is after 60 days. On average, that is the date when the trade payables account are settled. But here, if you pay within 30 days for payment, discount will be 0.5%. Okay, that means you have to pay within 30 days to get this discount. So administration cost will increase by 500 per year if the early settlement discount is taken. So what happens? This will increase. These are some drawbacks of early settlement discount. Okay. Nesut company buys components worth 1.5 million per year from the supplier. What is the worth of the component? 1.5 million. Okay. Now, from a different supplier, Nesut purchases 2.5 million per year of component K at a price of 5 per component. So they have given you the price per component and how much they purchase for a year. This is a different supplier. Consumption of component K can be assumed to be at a constant rate throughout the year. The company orders components at the start of each month. Okay, orders component at the start of each month in order to meet demand and the cost of placing each order. So what is the cost of placing each order? It is this, $148.44. The holding cost, what is the holding cost? The finance director of Nesut is concerned that approximately 1% of credit sales turns into irrecoverable debt. Okay. In addition, she has been advised that customers of the company takes an average of 65 days to settle their accounts. Do you see accounts payable? How many days you are taking to pay off your supplier? 60 days here. But customer are taking even more days, 5 days extra for you to pay. Right? 65 days. Even though Nesot requires settlement within 40 days. So Nesot finances working capital from an overdraft costing 4% per year. How are they going to finance the working capital? Overdraft costing 4% per year. Assume there are 360 days in a year. Okay. So you have to evaluate whether they should accept the early settlement discount or not. Whenever such question is asked about settlement, whether you have to accept something or not, first you have to see what are their conditions before accepting it. Okay. So first we have to see how are you going to start this mission with. First you have to see what is their position before the discount. Okay. So we are going to work out what is the relevant trade payable before discount. We have to see what are our trade payables before discount and after discount. Okay. So can extend this line. Relevant trade payables. It's not just a calculation, you need to write in Excel as well. Trade payables before discount. Okay. You extend the line so it can be seen fully. Okay. Relevant trade payables before discount. What is it? So the calculation you can do here. Okay. You can press equal. Remember, if you don't press the equal sign, you cannot do any calculation. No functions will be performed by Excel. You have to press equal. What is it? They buy 1.5 million component per year. Okay. So on this 1.5 million, what is the trade payable? How many days? 60 days. Okay. They're taking 60 days. This is before discount. Okay. Normally 60 days. So out of 360, 60 days they are taking to pay their supplier on this 1,500,000. So how are you going to put this? It's 1.5 million. So 1, 5. There will be 5 zeros. 1, 2, 3, 4, 5. Multiply by 60. Divide by 360. Enter. So the moment you enter, this comes. Okay. You don't have to show the working over here because when you click on the cell, this working can be shown here. Okay. So you don't have to write it separately and then do the calculation. No. Immediately you put equal sign and start doing a calculation. When you click here, the examiner can see your working here. Even you can see your working here. So if you change something here, the answer will automatically change. Okay. Excel will change it for you. So 250,000. So whatever the dollar you have to add, the currency you have to add, that you can do it later at the end. Okay. Final answer. But for working, let's keep it as 250,000. That means it is $250,000. Next, relevant trade payables after discount. So what I'm going to do is copy paste this. Rather than writing the whole thing again and wasting time, I'm going to copy this and just change this word. I will change before to after. These are some things which you need to do to save time. Okay, you have to be very quick. Now, what is it? After discount, how many days? Offer within 30 days. Okay, within 30 days only, then only you will get a discount. So now it is the same 1.5 million. So 1, 5, 1, 2, 3, 4, 5. Okay. Multiply by how many days? 30 days. 30 divided by 360. Enter. 125,000. Okay. Next. So what is that reduction in trade payables? You can see how much your trade payable reduced. Okay. Reduction in trade payables. So reduction is just simply the difference between this equal this minus this. Close bracket, enter. So this is a reduction in trade payables. Now, there is another way of doing this 125,000, which is more quick, which in the exam, under the condition, if you don't have time, you can do. It's better that you learn both the ways. In case you forget one, you can adapt this. Okay, this is the second way of finding this. You will get this only, but there's a quicker method of finding it, which will save your time. What is it? Okay, it is simply equal to same 1.5 million, 5 zeros. Okay, multiply by, put, just remove the bracket from here. Here I'm going to put bracket. Now bracket, why? Because I'm going to take, before it was 60 before discount. So 60 minus, now after discount it will be 30 days. So just take the difference between the days. 60 days minus 30 days. 60 minus 30, bracket, divide by 360. Enter. Do you see? Once you click on the cell, you can see your formula here. Still, okay, you should be getting the same answer. This is more quicker method of doing it. In the exam, you can do it. You will still get the full marks, no marks will be cut. Okay. So, what else? Now we have to take all the cost. Okay. The finance needed to reduce the trade payables will increase the overdraft. So what am I going to write? Now you have to find out all the cost. What are all the cost? Increase in finance cost. Your finance cost will increase. Okay, all the cost you are writing here. What is it? What would be your cost? So if you see the last paragraph, okay, Nesset finances working capital from an overdraft costing 4% per year. It's a finance cost, right? Because in overdraft you have to pay interest, and that is dealt in the finance section. Okay, finance cost, it is known as finance cost only, 4%. So in order to reduce this, okay, trade payables, you are incurring cost, overdraft cost. Okay, your overdraft is increasing. In order to reduce this trade payables, overdraft is increasing. Okay, so for that we are having an increase in finance cost. So that will be equal to this into 4%. Okay, 4% you can write as 4% as it is, or you can write 0.04 is the same thing, 5,000. This is an increase in finance cost. Next we have administration cost. So yeah, administration cost will increase. Admin cost, okay, I'm writing short forms. Okay, admin cost increase. Please write whether it increases or decreases next to it. Admin cost will increase. Where did they tell us about the admin cost? Here. Administration cost will increase by $500 per year. So here you don't need any working. Directly you can just enter 500 in the box. 500, that's it. Next. What is next? Discount from supplier. Okay. Discount. The discount you are from supplier. So it's a loss for you, right? Because you are now getting a discount. You're not getting the original value from the supplier. So discount from supplier. What is the discount from supplier? What is the discount rate? It is 0.5% on this 1.5 million. So simply you are taking double K equal to 1, 5, 1, 2, 3, 4, 5 multiply by 0.5%. Okay, enter. Next, what is the net benefit of discount? I'm sorry, this is not a cost. Okay, discount from supplier is not a cost. That will be the discount you will get. You will receive this discount. So what is the net benefit of discount? You can even write here. Net benefit of discount. That means your benefit should be more than the cost. Okay. If you see, spelling is wrong, so discount equal to this minus this minus this, because these two are cost, finance and admin cost. From the discount you're deducting it. So your net benefit is 2000. It's a positive figure. What does it show? That means there is a benefit of accepting. You should accept. Okay. So what should you write? You have to write this. Okay. Just writing 2000 is not enough. You have to write on financial grounds. Whenever you are accepting, whenever you are told like this, whether you should accept a project or not, whether you should go for this, make this product or not, you should always write whether it's on financial grounds or not. How will you understand? Because this question we just did on calculation, we are saying on this 2000 only. There are no other non-financial factors we don't have to say whether we should accept or not. So in that case, you have to write on financial grounds and company, okay, that is the Nesut company, should accept. They should or they should not. They should accept definitely because it's 2000. Should accept the supply. The benefit is more than the cost. Should accept the supplier's early discount offer. Or should accept early discount. Okay, just. Okay. Now let me tell you how your marking scheme. How your marking scheme is. How are you getting this 4 marks? You should understand this. It's very important. Otherwise, you don't know what to write, how much to write. Sometimes you might be wasting more time. Okay. Now, if you see, if you read this case study, since this is your first question you are seeing in section C, don't think that whatever you are given here, you have to use all this. We haven't used all this holding cost and cost of placing order, and all these things are not needed in this question. Whatever is needed in this question, we are only using that piece of information. Okay. Because the same case study is there and you will be asked many different questions on this same case study. There are 2 case studies. Okay. So the 4 marks you are getting 1 mark to find the change in trade payables. What is it? This reduction. Okay, the change, how much it changed. 1 mark you will get for that reduction. Another 1 mark for increase in finance cost. Okay, let me highlight it, or let me color. You can color the cell if you want. If you want to show something like this, you can color the cell like this if you want to highlight. So let me make it bold. This is this one, okay. 1 mark for changing increase in finance cost, half a mark for administration cost increase, half a mark. Okay, why half a mark? Why not 1 mark? 1 mark is only required in the places where you have to do some kind of working. Where working is not required, you just have taken copy pasted from the scenario a number, you will only get half a mark. Like administration cost is 500, no working is required, we just took 500, so in that case it's half a mark. Okay. Early settlement discount. Early settlement discount is half a mark. That means this net benefit is another half a mark. Let me make it bold. Okay. So 1 mark for reduction, 1 mark for finance cost, half a mark for admin cost, another half a mark to show the net benefit of discount. Why half a mark? Because no working is required. We know it's just the addition and we just add and minus, that's it. Minus the cost from the discount. Okay. I'm sorry, not the net benefit. Half a mark is for this discount from the supplier. How much discount you are receiving? Because definitely if all these are correct, this will be correct. Okay, the net benefit. And another half a mark for this, for writing this. That's why it's very important that you should write after calculation at the end. Because the question asked whether early settlement discount is will be offered or not. You have to say yes, it will be offered, or no, it will not be offered. Either one of this. Based on what? You just cannot say you have to accept, you should not accept. You should say why they should accept or why they should not accept. In this case, they should accept. Why? Based on financial grounds, because there's a net benefit of discount. If it was a net cost, if there was a cost was higher, then you can say on financial grounds company should not accept the early discount. But you need to write this. Half a mark is for there, for just stating this one line. Okay. And another thing, what will tell you how to do a question, okay, or how to start with a question is the word evaluate. Look at the words. Describe, explain, evaluate. These words are very important. Evaluate means always pros and cons. You have to balance your advantages with your disadvantages. That's what evaluation means. Evaluate. That's what we did. We took the benefit, which is the discount, and we checked it with the cost. Then we balanced it and saw which one is more. And then we went on with a decision which is beneficial. So that is the meaning of evaluate. Wherever you see this word evaluate, you have to find the pros and the cons and weigh them against each other and see which is more and then recommend. Okay. So leading on to the next question in section C. 6 marks. Case study same. We have read it, so it's not required to read it again, but in case you forgot or you want to reread it, you can reread it again. Okay. Again, if you see here, the words comes again, evaluate, same word, that means pros and cons. Okay, evaluate whether the company should adopt an economic order quantity approach to ordering component K. You definitely have to use some kind of formula here because we have a formula for that economic order quantity. It is there in your formula sheet. So if you haven't memorized the formula, it's okay. You can use a formula. Okay. So how do you start with it? Economic order quantity. If you want to look at the formula, just go to help formula sheet, click here, go to formula sheet, and it was zoomed. Okay. So here it is, economic order quantity. In fact, it is the first formula. Okay. So what else is there in this formula? You need to calculate, find all of these variables, whatever is there. What is it? You can see 2 into CO into D into CH. What is the CH? CH is cost of holding, CO is cost of ordering, and D is demand. That means you have to find 3 things. Cost of holding, cost of order, and demand for you to use this formula. Okay, and this information, if you see, it is there in this paragraph. Second paragraph you have to use for this. It's very important. You should know which paragraph is for which requirement. You have to link. Okay. So now let's start by finding the demand because that is the easiest. Okay. Annual demand. Okay. Annual demand. What is it? What is the annual demand? Equal to, just check. From different supply, they purchase 2.5 million per year of component K. Here they specifically asked you about component K. So this should tell you that you should use the second paragraph information. Okay. Component K. So what is it? If you see, they purchased 2.4 million at a price 5 per component. Okay. So that means it will be 2.4 million. 2, 4, 1, 2, 3, 4, 5, divide by 5. It will be 480,000 units per year. Okay, 480,000 units per year. You can even write here if you want, units per year in the next column. Okay, because if you write here, you cannot write here because then this function will not perform. You can write next to it for you to understand this 48,000 as units per year. Next, each month. Okay, you have to find for each month. Each month the company orders how much? You have to understand how much the company orders. Okay, and company orders. Just extend the line so you can see the sentence. Definitely, to find this, how much they order each month, you first have to start with annual demand, because if you don't find the annual demand, you cannot find the next one. So equal to this one, annual demand, that is the units per year, divide by how many? 12, right? For each month. So for 12 months, that is 40,000 units. Next, current ordering cost. What is the current ordering cost? My spelling might be wrong, but never mind. But you don't make this mistake, okay, in the exam. What is it? What is the current ordering cost? If you see the current ordering cost here, the company orders component at the start of each month. That's why we found for the month. Okay, that's the reason. In order to meet demand, and the cost of placing each order is 248.4 here. It is 248.4. This has to be multiplied by 12. Okay, annual if you have to find out. So equal to 248.44 multiplied by 12. It will be 2981. You can round up this number and write. Okay, 29. It's better to use the rounded figure, 2981 per year. So 2981 per year. Average inventory of component K. What is the average inventory of K? Okay, component K or K. What will be the average? Equal to what? Equal to this 40,000 units divided by 2. Divide by 2, which will be 20,000. 20,000 units. Next we have current holding cost. I'm just going to copy paste and change this to holding cost. Okay, the current holding cost is, the holding cost of component K is 1.6 per unit per year. Okay, so how many units? It is equal to 20,000 units multiplied by, what is it, 1.06 per unit. So multiply by 1.06, 21,200. Now the total cost of current order policy. What is the total cost? Total cost of current order policy. Just add your current holding cost and current ordering cost. Okay, equal to this. Okay, I'm sorry, you cannot take this number, or 2981 plus 21,200. You will say this will come in decimal. Okay, 24181.28. if you want to round a number, okay, round to whole number, press equal, round, bracket, put this, click this number, comma 0. Whenever you want to round a number to whole number, comma 0. If you press comma 1, it will round it up to 1 decimal place, comma 2, 2 decimal place. 0 means whole, okay? 0 means 0 decimal place, there will be no 0. 24181. Now we are going to use the formula. What is the formula? Let's keep it. So it is 2 into current ordering cost into demand divided by current holding cost, square root of it. So we are going to do this step by step here. Step by step. Economic order. Okay, the short form for economic order quantity is EOQ. You can use EOQ, it's understood. Okay, so the formula for that is two. Okay, you can keep the formula in front of you and see. It's 2 multiplied by, okay, 2 multiplied by what? 2 multiplied by the cost of placing each order, which is 248.44. Okay, 248.44 multiply by your demand. What is your demand? 480,000. Okay, units. Divide this whole thing. Okay, sorry, before divide you put bracket, close bracket, divide the whole thing by 1.06. Why 1.06? Current the cost of holding 1.06. Now press enter. Press enter. Just enter. So when you press enter, you can see the number is quite big enough, right? But remember, you have to find the square root of this. You haven't still found the square root of this. How to find square root of this? There are two ways you can find the square root of this number. One is you can use Excel. The other one is you can use calculator. Definitely I would prefer using Excel. So if you press this, okay, equal to, press this number, okay, to the power of shift, okay, press shift and number 6, then it will take you to the power half. Okay, half means 0.5. Why half? To the power half, because square root, it will give you the number. Okay, if you take it, round this to whole, comma 0, it will be 15,000. So 15,000 units per order. Okay, another way is you can use calculator, but then you need to press all this number, which will take a lot of time. Okay, because you have that square root sign over here. In this calculator you don't have, but you can do it. You have this power sign, which you can use to find to the power of half. So here you are going to enter this number, or even better that you round this number to the whole number, so that you can, it's much easier for you to input it in calculator, comma 0. Okay, so 22,500 2264 2264, you have to use this 0.5. Okay, or if you want to put half, then put this and put n over d. Automatically it will bring it in terms of fraction 1. You have to press this to come down, and 2, enter. Okay, it is the same as this, but if you see, the calculator will not show you It stops after this digit, the 7. It does not show 15082. But still I would prefer using Excel, is much faster. Okay. Because you just click the cell and then that's it. In calculator you have to write it. You cannot copy paste it in the calculator, the number. So 15,000 units per order. Now, number of orders per year. Next you have to find what are the number of orders per year. Okay. Per year. So now your annual demand is this much divided by how many orders? This 15,000. It is 32 orders per year. Next, ordering cost. What will be ordering cost? It is simply number of orders per year multiplied by the cost. What was the ordering cost? 248.4. 288.44. So 7950.08. You can round this to the whole decimal place. It will be 7950. Next, average inventory of component K. Or average inventory of K. Whatever. 15,000. Okay, here, sorry. Equal to 15,000 divided by 2. Average you are finding. 7,500. Holding cost. Okay. So what is the holding cost? It is this average inventory multiply by what is the holding cost in the case study? 1.06. Sorry. It is oh, you can just go undo. Okay, equal to this into 1.06. So it's 7950. Now, what is the total cost of equity ordering policy? EOQ ordering policy. It is simply the average inventory this plus, sorry, I always here, or you can press the sum function. Okay, just this 2 and then enter. Okay. I'm sorry, it's not this one. You are multiplying it by 2, right? So it will be 7950 into 2. 15,900. So now you have to write this because they will evaluate whether they should adopt this or not. So on financial grounds, it's important that you write this. Okay, on financial grounds, comma, the company should adopt. Okay, I'm not writing the whole sentence, you write it. Should adopt an EOQ approach for ordering component K as there is a reduction in cost of 8281. There's a reduction in cost of 8281. Reduction, let me show you the reduction in cost. Okay, equal to this minus this 8281. Can you see that? Because there's a reduction in cost, they should be accepted. Now let me give you the marking scheme. How the marks are awarded. 1 mark for annual demand, 1 mark for current ordering cost, 1 mark for current holding cost, 1 mark for economic order quantity, half a mark for economic order quantity ordering cost, half a mark for economic order quantity holding cost, 1 mark for comment on adopting EOQ approach to ordering. That's how you're getting a 6 marks. Next, it is the same case study. Now it is not evaluate. Now you have to type. That's why you are given word, and it's for 10 marks. Okay, this 20 marks is after taking the other two. The first question in section C was for 4 marks, the next one was for 6 marks, 10, and this is 10, making it to 20 marks. Okay, so critically discuss how they should improve the management of its trade receivable, 10 marks. So you need to type here. Okay, how much should you write? How much should you write? Well, you have to give 1 mark. Okay, I'm just going to give in bullet points. I'm not going to write the whole answer as it is, because then it will take so much of time. Okay, rather you can go copy paste the answer. Okay, take a printout and read the answer. When it's for 10 marks, okay, you are supposed to write 5 points. 10 divided by 2, 5 points. For 5 points you will be getting 2 marks. For explaining those 5 points you are getting 2 marks. So 5 into 2, that's how you are getting the 10 marks. Now what is the 5 points? And this 5 points you need to write using different 5 subheadings in different paragraphs. Okay, before you start explaining, briefly in the introduction you can give the 5 points. Okay, what is it? I'm just giving you what are the 5 ways they can improve the management of trade receivable. One is credit analysis. But when you write this bullet point, it's not enough. You need to discuss on this. You need to emphasize on, talk more on these points. Okay, so the first is credit analysis. You analyze, you offer credit to customers. Okay, offering credit to customers exposes a company to the risk of bad debts, and this should be minimized through credit analysis or assessing the credit worthiness. That means you are not giving credit to any customer. You first have to assess whether that customer is credit worthiness or not. If they are not, you will not give credit. That is known as credit analysis. Just one line is not enough. At least give 2 points explained in 2 lines to get the 2 marks. How can you do this? How can you do the credit analysis? The question comes. Okay, I'm just reading from the answer, explaining you and reading the answer. Okay, so this can be done through collecting. You can collect and analyze information about the potential credit customer. Find out information about that customer. Whether how are they paying, what are their paying history? Do they pay on time to the other company or not? Are they paying on time? Are they always paying late? Are they ones who are always late payers or not? Are they pay on time, or is it just, in rarely they pay late, when things get out of control, or is it their habit of paying late? You have to analyze these things. So what are some relevant information that you can use to do credit analysis? You can check their bank reference, They are trade reference, they are report from credit reference agencies, records of previous transactions, annual reports you can see. Okay. Sometimes if you see, the company might set up its own credit scoring system where the company gives credit score to their company. Okay. They will be setting their own system. Okay. Sometimes you can even visit the company to understand the business better. Because sometimes the business where it is very huge volume, when your business is very large, it is right, it is like a norm that you give on credit. But when your business is very small, it is not beneficial for you to give credit to every customer. Okay, so when you go to the business, go in the premises and check yourself, observe how it is, then you will understand it better. That's how you do credit analysis. Point number 2. Definitely you'll be keeping some space, okay? After credit analysis, you write this as subheading. You'll be writing few points after the some space, and then two, number 3, then number 4, then number 5. That's how you're writing it. Okay. That's how you need to write. Make sure that you know how to write in paragraphs, okay? Under different subheadings, 5 subheadings. You're not writing under one paragraph all the 5 points. No, 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 no. You have to divide it. Next is credit control. How are you going to do credit control? So what are you going to do is you are going to observe. You are going to have an eye on those customers whom you have given credit to. You have to monitor them regularly. Are they following the agreed trade terms? Are they breaching some of the terms? Okay, are they paying it on time? What could be some ways of monitoring? One way of monitoring is you could use aged trade receivable analysis, where you see how long the customer is taking to pay. Okay, you can see which amounts are overdue. You can even have a credit utilization report, which can assist the management in understanding to see how much credit they are using. Okay. And also you can see the company's exposure to the trade receivable, how much of trade receivable the company is exposed to. Point number 3, collection of amounts owed. Collection of amounts owed. What does this mean? Collection of amounts owed means your trade receivable should be kept informed about their accounts. You should inform your customers always. You have to give them reminders to pay. You cannot just give them on credit and sit back. No, 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 no. You have to give them reminders. Okay, and also with the amounts outstanding, when the amount should be is becoming due, how much amount is outstanding, right? And the terms of trade. All these things need to be given to the customer. An invoice should be made when sale is made. Regular statements you have to send your customer. If your customer is not paying, you cannot say my customer is not paying, therefore I cannot do anything. No, you need to send regular statements to them on a monthly basis. For example, every month you can send them statement. Okay. And also sometimes, like you have, like as you saw, you can give discounts to your customers so that they pay early. Okay. And also, how are you going to deal with the overdue accounts when it has been overdue? When the customer is not paying and the account is overdue, how are you going to deal with it? You have to chase it using procedure. What is it? They should be chased using procedures contained within a company's trade receivable management policy. Okay, reminders of payment due should be sent. Okay, you can even tell them that a final demand. You can call them for a final demand if it's necessary. You can call them on telephone, or you can do personal visit to them. Okay, you can take legal action. Of course, legal action and all is a last resort. You should not go immediately when everything else you have tried and nothing is working, still they are not paying. Then you can go for legal action. Okay, you can even employ a specialist debt collection agency. But make sure that when you are employing someone else to collect your debt or taking legal action, you have to be aware of the cost. There are costs to that, okay? Because whatever you do, you have to see the cost and the benefit. If your cost of legal action is more than the benefit you are going to get receive from the due what you have to collect from your customer, then you should not take the legal action. You should not go for it. Okay. Next, factoring of trade receivable. Number 4. Factoring of trade receivable. What is it? Companies outsource or they choose someone to manage the trade receivable. Now you have to give them a commission. They are the one who is going to collect this trade receivable on behalf of you, and then they're going to give it to you. But for that they will charge a commission, okay? Because why you are giving it to someone factoring? Because they are expertise in that. They know how to collect. They can collect much faster than you can do. They have knowledge on that. They have specialist knowledge on credit analysis, credit control, collection of amounts owed and all. Okay. So we have 4. Okay. What is the 5th point? 5th point is they didn't specify. Okay. It is other relevant discussion. You could give some other points than this. And this could vary from person to person, but this 4 definitely needs to be there, the top 4. The 5th one is you are free to do. Write some relevant whichever you think could improve the management of trade receivable. Okay. So now let us go to the next one, and this is a new case study. Okay. This is the second scenario. Okay, based on this we have 2 questions, this one and the next one. So this is one before the last. Calculate the net present value. Definitely calculation of net present value, investment appraisal topic will come in section C. One question at least will come, so be prepared for your net present value. Calculate net present value of the investment project in nominal terms and comment on its financial acceptability. 12 marks. Okay. And here one thing you need to notice. Okay, you need to read this whole scenario. What happens when you try next? It will not open. Why? Because they're saying you have not yet viewed the entire screen. Please use all scroll bars to open any on-screen exhibits before trying again. You cannot go to the next page. So this saves you from missing out on anything on the screen. Because you have to scroll down and read this whole case before you proceed to the next one. Okay. So Hebek is preparing to launch a new product in new market which is outside its current business operations. The company has undertaken market research and test of marketing at a cost of. Okay. Wherever numbers are there, calculation, just highlight it. You might need it for your net present value. As a result of which it expects the new product to be successful, Hebek plans to charge a lower selling price initially and then increase the selling price on the assumption that the new product will establish itself in the new market. Focus sales volume, selling price, and variable cost. So for here you have been given the volume, price, variable cost. Selling price and variable costs are given here in current price terms before taking on a forecast selling price inflation of 4% per year and variable cost. So before inflation, they didn't inflate it, okay? 4% per year. Variable cost is 5% per year, the inflation. Okay. Incremental fixed cost of 500 per year in current price terms would arise as a result of producing a new product. Fixed cost inflation of 8% per year is expected. So the fixed cost is this. And inflation is 8%. See, just because of its fixed cost, You cannot say you don't have to inflate. Still, inflation is there for fixed costs also, okay? The initial investment cost of production equipment for the new product will be, so this initial investment is 2.5 million. You need all this sales, the cost and the initial investment for you to find the net present value. Okay, payable at the start of the first year of operation. Production will cease to end of 4 years. Okay, we saw that it's only for 4 years. That means after 4 years it will cease. That's what they have assumed. Because the new product is expected to have become obsolete due to new technology, production equipment would have a scrap value at the end of 4 years in future value terms. Okay, what is it? The production equipment will have a scrap value the 4th year. Next, investment in working capital 1.5 will be required at the start of first year of operation. Working capital inflation of 6% per year is expected, and working capital will be recovered in full at the end of 4 years. So this is for working capital. Sorry. Next, inflation is 6% for working capital, and it will be recovered in full at the end of 4 years. Hebek pays corporation tax 20% here, so tax is 20%, with the tax liability being settled in the year in which it arises. The company can claim tax allowable depreciation of 25%, reducing balance with the initial investment cost, adjusted in the final year of operation for a balancing allowance or charge. So tax allowable is on a reducing balance basis. Make sure that you know how to calculate tax allowable depreciation, because whenever you are asked a net present value question, definitely you will be asked net present value question. In that, you will be asked a question on tax allowable depreciation always. Even in AFM also, it is asked. So that means you have to know. There is no option of whether can I omit this or not. You have to know tax allowable depreciation. How to calculate both straight line and reducing balance basis, okay? And how to find this balancing allowance or charge in the final year, you should know. Now what else do we need? Definitely cost of capital we need, right? Otherwise, how are you going to discount it? So Hebek currently has a nominal after-tax weighted average cost of capital 12 and real after-tax WACC. Now you see you have been given nominal. Okay. Nominal WACC is 12% and real. Definitely nominal will be more because nominal includes inflation, right? So nominal WACC is 12%, real is 8.5%. Why they have given these two different WACC for you to decide which one to take? You have to know which WACC you are going to use. This is to confuse you. They are giving you two WACC. So you have to be very careful which WACC you are picking to discount. Okay, the company uses its current WACC as a discount rate for all the investment projects. Now, what is the starting point? Okay, so starting point is you can start from your 1 to first start making the column. Okay, how many years it is? This is year. So there are 4 years. Okay, next let us drop down the 3 zeros. If you want to deal in the whole numbers you can do it, but the better thing is you drop down to 3 decimal places. If you see, if you write $3 zeros, it will not come. What do you need to write? Dollar, comma, just put any symbol before zero so that it is not taken as a number. Okay, now if you see, okay, I'm going to do the formatting and all, bold and all. So now what is my first item? Start with sales revenue. Okay, sales revenue is always the first item. So if you see your sales is 200,000. Okay, you have been given the volume and the price. What should you do? Now equal to 200. Don't put 200,000. Why? Because we have dropped down the 3 zeros. Okay, so put 200 multiply by, what is the selling price? 15. Multiply by the inflation. What is the inflation rate for the selling price? 4%. So it will be 1.04. Enter. 3102. Now you cannot drag this to the other cells. The reason is because we have different volume, different selling price for each year. So you cannot just drag it like this. Let's see what happens if you drag it. It will copy paste the same thing. So you cannot do it. Undo it. So every year you need to press. Next it will be 800 multiplied by selling prices 18 into. Be careful when you are putting 1.04. It is 1.04 to the power 2. If you want to put to the power 2, okay, because in the second year. So press shift and this number 6 and then 2. Enter. Enter. So just drag it. Okay. Just wait a minute. Something somewhere is wrong. So it's 818 into. Okay. Next equal to 900 multiplied by 22. This time 1.04 to the power 3 because third year, because they told inflation will be per year. Okay. Next we have equal to 400 multiplied by 22 multiplied by 1.04 to the power, to the power 4. You cannot see the number fully, so extend the line column. Okay. If you see in the fourth year, it went down. Why? Because your volume went down from 900 to 400. Okay. Next, variable cost. So the next item is variable cost, VC. VC also same way you have to do. Multiply it by the sales volume because variable cost changes with the volume, and take the inflation. Inflation for variable is 5%. Okay, so this quickly we can do. Variable cost 9 multiply by 200 multiply by 1.05. Okay, second year equal to variable cost is 9 only. Okay, 9 into 800 into 1.05 to the power 2. So third and fourth year also you'll be able to do. It is 9 multiplied by 900 multiplied by 1.05 to the power 3. Next we have 9 multiplied by 400 multiplied by 1.05 to the power 4. Okay, and this needs to be deducted, minus. Okay, you have to show the variable cost in minus. How are you going to show it in minus? It's simple. Just go to the bracket. Okay, after equal press minus, enter. It will come in minus. Same you have to do for the others also. After equal sign, minus, and then press enter. Next, is your contribution. Okay, so your contribution is what? For contribution you can put sum. Okay, it's just sales minus variable cost. What happens when you put the other way around? Okay, let me show you this. What happens if you take, let's say you say sales uh, sales minus variable cost. Just check what's happening. It's adding the number. Why? Because minus minus, this is already minus, you are minusing it, it becomes positive. If this was in positive, then you could have minus, but this is in negative, so just use the sum function. It will automatically minus the variable cost. Okay, the benefit of this is now you can drag it to the other cells like this. Okay, next we have fixed cost after contribution, FC. Sorry, not there, just undo. FC, fixed cost. What is the fixed cost? Fixed cost, if you see, it is 500, but this will be inflated by 8%. Okay, so it will be equal to 500 into 1.08 in the first year, 540. Next it will be, sorry, equal to, or what you can do is this, on this multiply by 1.08 on the previous years you can do. Why? Because here variable cost is fixed. It's 500, 500, 500 all the year. But for sales and variable cost, we couldn't take on the previous year because the volume for each year and the price for each year was different. But here on that previous 540, we just take 8% on that. Okay. Or if you don't want to do it like this, what you can do is you can put 500, same, because fixed cost for, but this time you need to put 1.08 to the power 2. Okay, still it will give you the same answer. Okay, but it's better to use this one. Sorry, on this you multiply by 1.08 because you can drag it to the other cells. Just see what happened. Okay, automatically it took 8% on the previous. Okay, just go to this and see the function if you want to see what they did. Now, so you deduct the fixed cost, and fixed costs are in minus, so what happens is go and just put a minus sign. Automatically it will, all the other cells will be minus. Okay, now taxable cash flow, and by the way, don't put bracket for minus, just put the minus sign, because Excel, when you work out the function with the bracket, it will not work out. It will show value. Okay, just for example 5, you are putting 3. Okay, now if you are putting it equal to sum, just see what's happening with this. It will not take this. If this was -3, automatically changes, right? So you have to put in Excel, when you're using Excel, on a CBE, you have to put minus, don't put bracket for minus. That's the reason I have made all minus. So next, after you deduct from contribution the fixed cost, comes taxable. It is known as taxable cash flow. You have to understand what each of this means. Okay, taxable cash flow now equal to sum. So from contribution minus fixed cost, take it to the other cells. Okay, now taxation. Definitely on taxable cash flow you have to charge tax, so tax needs to be taken. How are you going to take the tax? Taxes, what was the tax? It is 20%. So what are you going to do is just put wait, minus sign, minus 20, because you want to show the tax in minus. Okay, multiply by this rate, enter. Sorry, minus 0.2, multiply by this. So that your tax is in negative now. Just drag it to the other cells. What's happening, right? Next, taxable, tax allowable, right? Or TAD, you can say TAD. Okay, tax allowable depreciation. You are going to add it. Tax allowable depreciation. Or you can write TAD, simply TAD, tax allowable depreciation. Tax benefits, okay? It is a tax benefit, tax allowable depreciation, tax benefits. So for the tax allowable tax depreciation, you need a working. If you see, in fact, for all of this, whether it's sales, whether it's variable cost, for all this we required working. Okay, when you see your mark in scheme, you will see for the working, how they got the sales revenue, right? How they got the variable cost. Okay, in fact, later I will show you the working. You can do the working or you can do it like this. So for tax allowable depreciation, working is there. So we'll leave that line for now. Wherever working is required, just leave line. Go to the next item. What is the next item? Next item will be known as after tax cash flow. Okay. After tax cash flow, then we have the scrap value. After tax cash flow, definitely you cannot find out without finding TAD. Then we have scrap value. What was the scrap value? It is 125,000. So remove the 3 zeros. At the end of 4 years, it will be 125. Okay, next we have working capital. Working capital is 1.5 million and inflation is 6%. Now when you're taking inflation, it's not 1.06 into 1.5. No, 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 no. You're taking 6% on 1.5. Like this. 6%, sorry, 6% multiplied by 1.5 million. Okay. If you're taking in terms of million, then drop down the 3 zeros and, sorry, 1, 2. Okay, 1,500. It's 90. Okay. So now you're going to inflate it. When you go to the second year, okay, how are you going to do it? $6%, okay. it is 6% or 90. So equal to, sorry, 1.06. Not 1.06 multiplied by this rate. 95.4. Next, when I go into the next third year, how are you going to do it? How are you going to work out this working capital? It's important that you know how working capital works, because this is an area where students make mistake in the working capital. So it is 95.4. Right. How are you going to work on this? Okay, let's take 6%. 1.06 multiply by, sorry, equal to 1.06 multiply by this 101.124. Next, when we are going to the next, remember they told that it will be recovered at the end of the fourth year, and this all are minus. Okay, we are requiring working capital, such as put a minus sign outside the bracket also. Enter. Automatically everywhere it will be minus. Here when you do, just take the sum and take all these three. This much will be recovered in the fourth year. Okay. No, wait. Something is wrong with the working capital. This is this one. Because it is showing 1787. Definitely somewhere something is wrong, because it cannot show such a huge number showing 1787. Working capital of 1.5 million will be required at the start of the operation. Okay, so from 1.5 million, okay, basically if you are saying this from 1.5 billion, okay, so you are adding this worth 1.5. Okay, you are adding some, this needs to be added with, okay, plus 1500 your working capital will not add. So where you need to take individually, okay, there's a way of adding. Take this comma, this comma, you are putting the comma sign, okay, comma 1500 in year 0, okay, so year 0 working capital is 1500. Enter. Something, no, it is somewhere something is wrong, because it is supposed to be 17, okay, if you add this 3 and with 1500 it's not supposed to be this. Just add this plus this plus this plus 1500. Enter. Okay, the reason is because 1500 is in positive, it needs to be negative, that's why. So how are you going to make this in terms of negative? If you want to make this negative, just multiply this by -1, right? Automatically it will change. Right? So once this working capital is there, this has to be in positive in the 4th year because it will be recovered. So again you need to multiply this by -1 because negative will make it positive. Wait. It's becoming confusing, so let me make this easier for you. Just write 1500 here. Okay, -1500. Okay. Now let's perform the sum function. All this 3 so you have to press, after you press all this 3, press Control and press this, it will add all the 4 cells. Okay, but this definitely will be negative. If you want to make this into, okay, it will be positive, okay, the 4th year working capital. But here it's showing is negative, so what you can do is just copy paste this number here. When you're copy pasting it, you cannot copy paste because functions are used here, so it will exactly not copy this number. What you can do in this condition, when you just want to copy a value from a cell, copy. When you go to paste special and go to value, that's it. It will only copy the value, not the formula. So this will just remove the negative sign. Now here I'm going to copy this here again. Now I'm going to remove this from here and copy. That's why working capital, when you are doing, do a separate working somewhere. I will show that working after this is done. Net after working capital comes net cash flow. Okay, after net cash flow comes discount. Okay, at what discount rate we are using it to discount? Are we using 8.5% or 12%? It is simple, we are using 12% because they told nominal terms, okay, investment in nominal terms, and we are using nominal. For nominal terms, we have to use nominal cost of capital. In short, if we have inflated our cash flows, we have to use nominal cost of capital. So here in the sales, variable cost, fixed cost, we saw that we have inflated it. So we cannot use the real tax, real cost of capital. We have to use the nominal WACC, which is 12%. So you have to discount it at 12%. Okay. Once you discount it at 12%, okay, you can copy paste this figure from the table. Next, it is known as present value. Okay. From the present value, you minus your initial investment and you will get your net present value. Okay, so we'll keep some space. Now let us go to the working and show you. If you see the working, okay, these are known as workings. So here if you go to sales and all this for this, what they have done separate working for sales, and then they copy pasted from working to the sales figure. They have copy pasted that item from the working. They have got this and then they have copy pasted, but we have inputted it in here in the cells without doing any working. But I prefer doing the working system because you'll be getting marks for the working. Okay, for example, it's much easier also if you're doing it. Okay, so and you have to name your working. Which working is it? First working is for sales revenue. Okay, year. Okay, so the 4-year. Then you are going to put your selling price. Selling price SP. Then you are going to put your 4% inflation per year. Don't put SP, put selling price, okay? Sales volume. But here I'm using it in order to save time, okay? So now here the selling price is 15. Here after inflate it will be 15.6, and here sales volume is 200. Okay? You inflated 15 by 4% and it's 15.6. So 18, 22, 22. Next we have 19.47, 24.75, 25.74, 800, 900, 400. If you do it in one cell, you can just copy paste it to the other cell. This saves a lot of time. So what you are going to do is this multiply by this, the inflated ones. Okay, this multiply by this. This after inflation multiply by this. Okay, now you are going to copy paste it. This is much faster. Okay, so you just put this number, just copy to the cells, paste. It will show value. Just remove it. You cannot copy as it is, because whenever a function is put and when you're copying the function itself, you cannot. So when you're copying it to the cells, paste special values. Okay, you have to click on values, it will only click values. Okay, so now you can see the values. Same for the variable cost. Okay, this is much easier. Do the workings. In fact, variable cost. So for variable cost also, variable cost, inflation 5%, then sales volume SV. So sales volume you can just copy paste from here, and variable cost is same only, it is 9. So just drag this 9 to the other cells and then you inflate it. Okay, once you inflate it, 9.45. So what they did was, to find this inflated, they didn't, either you can use Excel or you can go to calculator and inflate it manually. Okay, 9 into 1.05 enter 9.45. Okay, so you can do manually also like this. Because they wanted to show it to 2 decimal places. Okay, 10.42, 10.94. It's better to show it in 2 decimal places or 1 decimal places in this case. So now it will be same, this multiply by this multiply by this. I'm just going to drag it to the other cells and I'm going to copy this, and when I'm going to paste this to the variable cost, paste special, just the values. Just make sure that you remove this. Okay, this is not in minus. So automatically when you see the contribution, it is showing addition. Why? It was sum. So what you can do is this minus this. In one cell you do, automatically other cell it will take. So just you need to drag this. It's not sum. Okay, it is this minus this. Enter. Just drag it to the other cells. Okay. Next we have the tax benefits of allowable depreciation as a third working. And working capital. So for the others we don't have any working. We just have, for working capital we have, and tax allowable depreciation. Okay. TAD. So you can, when you're taking this, you can drop down the 3 zeros. Okay. Paste. Okay. Tax allowable depreciation and tax benefit. Sorry, it's tax belly. It's a tax benefit. Because of this, you should not pay tax. So here, how are you getting it? On reducing balance basis. Okay. Tax allowable depreciation is 25 on reducing balance basis on initial investment cost. What is the initial investment cost? It was 2.5 million. So 25% on 2.5 million. Okay, you can use a calculator to find that. 25% on 2.5 million or 2,500. Because you are dropping down the 3 zeros. So enter. It is 625. We'll keep the calculator here. 625. Okay. Second year when you go, take 25% on 625 and minus it from 625. Okay. Again 25% on 625. Okay. So 625 minus 156.25. It's 468.75. So we'll take the whole number 469. Sorry, we'll put here 469. Okay. Double click 469. Okay. For the third one, 25% on 469. Okay, so 469 minus 117.25. 0.25, enter. It is, you can take the whole number 352. Double click 352. And finally the last one. Okay. What is the last one? So last one, now you're taking 25 on 351.775. So 351.75. This is much easier in calculator because you have all the previous steps. Okay, 87.9375, enter. 263.8125. 263. Or there is a way of doing this. Okay, much easier way. The fourth year, whenever you come to the last year, okay, just take what is the cost, initial cost, 2500. From there, just minus all the 3 years tax allowable depreciation, because anyway the total of your tax allowable depreciation should be equal to your initial investment, which is 2.5 million, minus 625. Sorry, 625 minus 469 minus 352. 52, enter. It is 1054. There is something is wrong over here, because it was supposed to be okay. Oops, okay. This is the reason why I'm getting a wrong answer, because at the end of 4 year we have a scrap value also, the production equipment, which is 125. Okay. So you have to minus this scrap value also, right? The amount we were having was 1054. From there you have to minus 1054. From here you have to minus the scrap value 125 also. Now 929. Okay, this is the value, 929. Now the tax benefit. Tax benefit is, what is the tax? 20%. So 20 into this, which is 125. Now let me drag it. The other cells, 93, 70 and 186. Okay, just take 20% on the tax allowable depreciation, drag it. Okay, so it's the same. I'm going to copy this. Copy where? In the tax allowable benefit, but when you go paste, it's just the values. Okay, just remove the minus sign and keep everything normal. Okay, so here when you go to the tax allowable cash flow, it is not the sum, it is this minus fixed costs. And just take it to the others. Okay, here also just make sure everything is in positive terms. Okay, now we have after tax cash flow. How are we going to find the after tax cash flow? It is simply taxable tax cash flow minus tax plus your this. Okay, so equal to this minus tax plus TAD. Okay, this drag it to the other cells. Okay, now let's do the working for the working capital. So working capital is in bold. Okay, when you're starting working capital, start with 0 also. Here 0. And here also we are going to take this. Okay, next. So working capital, inflation 6% and incremental. So working capital in the beginning is 1,500, 1.5 million. And when you inflate it by 6%, the 1,500 it will be 1,590. So how much it increased? Only 90, from 1,500 to 1,590. Next, when you're going to the next one, inflate 1,590 by 6, it will be 1,685. So how much it increased? The incremental was 90. So from 1,590 to 1,685. Okay, 95. You need to increase it by further 95. Because 1,590 plus 95. Okay, this and this if you add should give you this. Third year. Again you inflate 1,685 by 6%, you will be getting 1,787. So the incremental is 102. And finally when you come, just add this with this. Okay, it is 1,787. So when you are taking this, even though it's in year, okay, so this comes in year 1, we are taking the incremental only. For working capital, always we are taking the incremental. Now when we are going to the net cash flow, we have to deduct the working capital, okay, for the first 3 years. So equal to after tax cash flow minus working capital. Here you need to do it separately. Just uh, so for this two you can take. You can drag it for this two but not this one. Why? Because you need to add this. So this one will be, sorry, this if you are taking it, it will be after tax cash flow plus the scrap value plus the working capital. Okay, now you have to discount it at 12%. So to do that, go to formula sheet and go to the present value table. The discount is 12%, right? So 12%, this is the table for the first 4 year. 0.893, 797, 712 and 0.636. Make sure that you write this number here so that it's easy for you to 0.893, 0.797, 0.712 and 0.636. So now when you find the present value, just this multiply by the discount. And I'm going to drag it to the other cells. Okay. So what is the present value of future cash flows? Okay, the PV. Just add all the present value. Initial investment, okay? You have to minus your initial investment. So investment, what was the investment? It is 2.5 plus 1.5. Don't forget to take your working capital. Whenever you are starting investing anything at the start of the operation, whether it's working capital, whether it's initial investment, both needs to be added for you to minus it from present value. 2.5 plus 1.5, so it is 4,000. Okay, 4,000. Now it is the present value minus the minus the investment. 19987. If you want better to round this number, always round your net present value to whole number at the end. 198, it's positive. Okay, this is the net present value. You can even color it. Okay, net present value. So what are you going to write? You have to write this. Net present value is strongly positive and so the project is financially acceptable. You have to write the sentence. Then because it is positive, this will be acceptable. Okay, now I know that this question is kind of very boring, right? We have been in this question since a long time. It's almost going to be 2 hours, okay, for this question, but there is an alternative way for finding the after tax cash flow. After tax cash flow is this one, okay? There is an alternative way to find out rather than using all the sales, variable cost, contribution and all. What is it? Alternative way is taxable cash flow, okay? You deduct your taxable allowable depreciation from taxable cash flow. So you take your taxable cash flow, taxable cash flow, okay? Use it as 0. Why? Let us go to taxable cash flow. Okay, you need to copy. Nope. Let us copy again. Okay, copy, paste. When you're pasting, it will paste as 0. Paste special. After that, tax allowable depreciation, TAD. Okay, minus your tax allowable depreciation from your taxable cash flow. That is 625, 469, 352, and 929. Get your taxable profit. This minus this. Next we have tax. Now you take tax, okay, on this, on taxable profit, which is 20%. Okay, drag it. After you take tax, what do? You deduct your tax from the taxable profit and get after tax profit. Okay, so this minus this, and you drag this. Add back. Now you are dealing in profit. Okay, you have to add back tax allowable depreciation. Why you are adding back tax allowable depreciation? Because you have to deal in cash to discount, not profit. You have to convert your profit to cash. Whenever you are converting a profit to cash, all the expenses what you have deducted to get your profit, you need to add back. It's like depreciation or your non-cash expenses you are adding back. So add back tax allowable depreciation. All this. Okay. Once you add back sum, just drag it. It will be known as after tax cash flow. After tax cash flow, not profit. So if you see this figure 677 to 4377 and look at this after tax cash flow, it's the same, the one in orange and this one. Okay, now we are over with this. Let me tell you the marking scheme. How are you getting this 12 marks? 1 mark for inflating the selling price, 1 mark for sales revenue, 1 mark for inflated variable cost, 1 mark for inflated fixed costs, 1 for tax liability, that is tax, 1 for tax allowable depreciation, 1 for the benefit, tax benefit in year 4. Okay, see, 1 mark of tax allowable depreciation from year 1 to 3 and 1 separate mark for year 4. 2 marks for incremental working capital and recovery, 1 mark for calculation of present value, 1 mark for correct initial investment. What is that correct initial investment? That 4,000 which we took here. For that you are getting 1 mark. This 4,000. Okay, 1,000 plus 1,500 plus 2,500. Comment on financial acceptability, that it is positive, therefore it should be accepted. To write that sentence, 1 mark you are getting. Okay, that's how you are getting the 12 mark. And finally we are coming to the last question. Okay, if you see, it is for 8 marks. Discuss how the capital asset pricing model can assist the company in making a better investment decision with respect to its new product launch. 8 marks. So here, make sure that you read these answers. Okay, definitely I'm not going to write the whole answer. Okay, but definitely you are getting the 8 marks. Okay, I will write what are you getting the 8 marks for. You have to talk about business risk, financial risk, and WAC. Okay, 2 marks. Two marks for that. Using a proxy company. Okay, using proxy company you are getting 1 mark. Systematic risk, business risk, and financial risk. That means systematic, business, and financial risk. Okay, 1 mark. Ungearing the equity beta. Re-gearing the asset beta. Project specific cost of equity and WAC. Two marks. So just say this is how your marking scheme is. This is how you're getting the 8 marks. You have to talk about business risk, financial risk, WAC, systematic risk, proxy company, ungearing, re-gearing, cost of equity, WAC. All these things you have to talk in your answer. Okay, because all this is what capital asset pricing model only. When you're talking about new product launch. Okay. Here the WAC is given. So you can discuss on that. Here they have given you some risk. What is it? Obsolete due to new technology. That's why after 4 years they will not, right? They will cease the production. So business risk is there. Financial risk is taking debt. Okay, if you take debt and all. So make sure that in your answer all these are there. So with that, this is over. Practice test 1 is over. I have completed section A, section B, section C. Watch my section A and section B videos. So there are 3 videos, separate videos on financial management for practice test 1. On all the 3 sections, do watch them out. And my next and the final video for the financial management for the June exam will be practice test 2, where I will not be explaining you the concept. Come prepared for it, and we will do it together for in 3 hours. Okay, you will see me what I'm doing. You will just be seeing my screen, what I'll be doing, how I'm solving this question in the time. Okay, 3 hours. So make sure you're free for 3 hours and then come and watch the video. Okay, I will be doing it, solving the paper in the time limit 3 hours. Okay, till then, best of luck, and don't forget to take care of yourself.